Good evening and welcome to our April London South East IR webinar. For those of you who don't know me, I'm Donald Leggett, Head of Investor Relations at London South East, and I'm your host for this evening. We are delighted to welcome three excellent speakers tonight, kicking off our evening with AIM-listed Harland Wolff, who are famous for ship repairs, shipbuilding and renewables. Likewise, AIM-listed TechMinerals, they cover both ends of the battery metal spectrum. Their first battery recycling plant has just been given the go-ahead this very morning to start operations in Wolverhampton. And they also explore for battery metals such as cobalt, lithium, nickel and manganese. And finally, our third company tonight, Aura Minerals, are a sizable TSX and Brazilian listed gold copper producer with active mines in Honduras, Brazil and Mexico. Aura are focused on developing new mines and rapidly growing their total resources. Last year, they drilled a phenomenal 124,000 metres. Each presenter has 30 minutes or so to speak, perhaps a little bit longer, with 20 minutes to make their investment case before we take your questions and put them to the speakers. London South East is well known for its free data and moderated bulletin boards. We provide data and chat for every UK listed company, and we now offer level 2 data without adverts. Each month we have over 1 million users on our website. As ever, many thanks for joining us tonight, and it's time to hear from our CEOs. First up, it's Harland Wolff. Our first speaker tonight is CEO at Harland Wolff, who specialise in ship repairs and shipbuilding, as well as the renewable energy sector. Harland operate across 4 sites in the UK at Belfast, Appledore, Methil and Arnish. Harland Wolff delivered its first new build vessel in 20 years last week as it launched the first barge for Cory Group, with 22 more to follow, part of an £18 million contract. This is a major stepping stone to the massive £1.6 billion defence contract for 3 fleet solid support vessels which Harland won recently as part of a consortia with Navantia UK and naval architects BMT. Let's hear from John Wood, the CEO. Welcome, John.
Good evening, Donald, and good to be with you again.
It's always a pleasure to have you, John. Now, I believe you've got a video that you would like to play for us initially.
We do, Donald. We've got a brand new video, so we thought we'd share it with you first and all your listeners to get first view of this new video we've got. So we can go through that, and I'll take you through a pack.
Okay, over to you, Mike. Let's play the video. Thanks for sharing that with us, John. Now back to your slide presentation.
Perfect. Thanks for that, Donald. So good evening, ladies and gentlemen, and thanks for dialing in and viewing this evening's presentation. I'll take you through a few slides, just give you a bit of an update about our business, what we're up to. Clearly, we're at a really exciting time with the business. We're 3 years into a 5-year plan, and we've had several big wins over recent weeks with the fleet solid support contract, as Donald mentioned. And we're very close to some other projects coming through as well. And that's in addition, of course, to the barges and the fleet solid support vessel that's going into Belfast in the M55 project that's down in Appledore. When you look at the board, you've obviously got myself as the CEO, with Arun Rahman as our CFO, Malcolm Grote as our chairman, who's got many years acting as chair and NEDs within on the market. Sir Jonathan Band, who's the ex-First Sea Lord and also a main board director for Carnival Corp, which is one of the major industries that we are in. And then we've got Katia Zavota, who's in renewable energy and has held several high positions with Shell in that domain, and is very experienced in funding and growing businesses as we move forward. So I think as you look at the structure of the business we've got today, we've got Island McGee Energy on one side with Island McGee Energy Hub. The difference there is we've got the main project, which is 7 gas caverns in Island McGee that I'll talk about in a little bit more depth as we move through. And then I've got Island McGee Energy Hub, which is an incubator for some additional and new projects in that energy space around to renewables. When you move across to Harland Wolff, we've got our 4 sites: Belfast in Northern Ireland, Appledore, Methil, and Arnish in the Outer Hebrides. So the focus of the presentation this evening is really looking at our journey so far, our future vision, and then talking a little bit about Team Resolute and the fleet solid support contract, and then we'll just touch on Island McGee Energy. So if you look at the journey we've been on since 2010, the Island McGee energy concept was developed through Infrastrata at the time. We've moved on through, when we joined the business, myself and Arun, we completed the FEED and did a lot of detailed study work on how to get the project moving. And look, it was clear at that time that it may take a bit longer than we initially expected to get the project over the line. So we decided we needed some more business to keep the company viable and vibrant as we move through. Some excellent acquisition opportunities presented themselves in the Belfast acquisition of 5.25 million. Then we acquired the Appledore shipyard down in Devon for 7 million, and then there are 2 yards up in Scotland. So I think we've now got 60% of the fabrication capacity in the UK as we move forward in the marine and fabrication space. When you look at our sites across the UK, as you can see on this chart, from Methil on the east coast of Scotland, you go through the renewable wind farms, for example, up that east coast around the Pentland Firth, down through the Outer Hebrides, inside and Outer Hebrides, down through the Irish Sea and the Celtic Sea, past Appledore, past Belfast and Appledore. We're in the exact right location for all the new developments that are coming to bear. And I think we've got 2 of the largest dry docks in the UK, and the largest, the smaller, largest undercover dry dock down in Appledore, which is great for new building projects of that smaller variety. I think when you look at the footprint that we've got, 256 acres of prime real estate right down on the waterfront, and we've got strong relationships with the key decision makers and political decision makers. And I think we're now one of 3 shipyards with a 3rd shipyard stream that's been brought online for building new MOD vessels. And I think when you look at the offshore wind market, as that continues to develop, you'll see a lot of local content in Scotland, for example. I think BP announced recently that they were committed to building SOVs in Scotland. And I think you look at the fabrication of larger structures. And I think we've got the broad geographical spread. And having 4 sites, you can spread your risk over the different sites, really pick up on the availability of labour across the UK so that you've not got all your eggs in one basket. So if you look at some of the things that are really key to how we're doing this, it's really new technology and embracing innovation and technology. And look, in the future, we're looking to deepen that building dock to 14 metres to get the next generation of cruise ships in there. And that's really in collaboration with cruise owners who really struggle to find dry docks with that depth across the UK. And it's having a lot of collaboration through that. And I think as we go through looking towards net zero, alternative fuels, battery operations, green technology and the likes, and look, I think we're delivering what clients are looking for in this day and age. And if you look at the investment case, this is a fairly simple chart we've put together, looking at the turnover of the business in the forecast that we've issued to the market at the moment. So we've gone back from the pre-revenue position in 2019. We've gone up through, getting up to 1.4, 2.9, 28 million. And then the expected revenue this year of 100 to 115 million that we're on target to reach. And I think that the hardest area in that journey really was between 2021 and 2022. I think now that we've got the staff and people and we've got the management teams in place, it's a lot easier to see that growth. And I think following on to the final year of our forecast at the moment, it's up to that 200 to 230 million revenue. And I think onwards from there, we're looking to get year-on-year revenues of at least 500 million. And I think that's backed up by the slide that I'll take you through in a moment, showing the level of opportunities that we have in the market. That's from the pipeline of weighted opportunities and unweighted opportunities. And I think we're now really competitively positioned with the facility we've got. Shipbuilding's clearly now a government priority with the establishment of the new National Shipbuilding Office. It's doing really great work to really position shipbuilding as an industry that people want to work in and that government can support as we move forward. And we've got that ability to grow at scale. And I think it's not just about what we can do in the shipyards. It's about our in-service support line, how we get that work going outside the shipyard. And I think, you look at Island McGee Energy, we've got one of the most sought-after projects probably in the world at the moment, given the transition to net zero and how things will go to hydrogen. And I'll talk more about that in a little bit. And look, the firm foundations are in place. We've done a lot of the hard work over the past few years, getting the business stabilised. We've got a wider experienced board in place. And, we've got 77 million now that's getting invested into the yards in Belfast and Appledore as we move forward, really to make us one of the most advanced shipyards in the UK. No other shipyard in the UK has spent that amount of money purely on technology to give themselves that edge. And I think, we've got a great diverse project portfolio as we go through. Now got a backlog of 900 million over 7 years with a weighted pipeline of opportunities in excess of 3 billion as we move through. And I think, that 500 million of annualised turnover by 2025 is really a great place to be in. And we've got the 200 million syndicated debt facilities with Astra Management and commercial banks that we look to have in place by the end of June this year. And again, that really puts us on a firm foundation for the next stage of our journey. I think if you look at this chart, I won't stay on it too long because I know Donald's will be on me for running over for time. We've got at the moment we've got a large defence contingent in our workload, 16% commercial. Then we've got the cruise and ferry market that really seems to be under a bit of a renaissance as we go through in relation to repairs and maintenance, given on the back of COVID, the new build facility has really slowed down considerably from where it was before. I think as you can see, the weighted and unweighted pipeline, given our win rate at 34%, we've got more than enough opportunities in that weighted and unweighted bucket to get to our expected revenues for 2023, 2024, and obviously into 2025. As you get past 2025, you're starting to see revenues, the weighted and unweighted pipeline tail off a little bit. That's just because we don't have sight of projects and programs with enough detail at this moment in time. But by the time we get to 2028, in the middle chart on the backlog, we're looking at about a multi-year backlog of about 2 billion, and that's with converting some of the backlog to revenue as we go forward. And I think the top chart there on revenue, it's an interesting mix as you see the change from being overly reliant on defence to where renewables is starting to kick in and really boost the business as we go forward. You then look, just for those of you that don't know the business, we've got 5 key markets: defence, commercial, energy, cruise and ferry, and renewables. And we operate all through the project life cycle, from technical services and engineering design at the beginning of the project life cycle, fabrication, construction, new build vessels, repairs, structures, and that type of thing, onto repairs and maintenance, in-service support. It's an area that we're looking to really grow over the coming weeks and months. Conversion, again, it's an area that we see as high potential for growth. And then decommissioning at the end of the project life cycle. We've started to really boost our own design capacity. The bottom left is a workboat that we've designed in-house. The picture up above it is an in-house design for a fishing vessel. And then obviously the magnificent flagship that never was, that we designed under the last Prime Minister but one. And I think, look, that was a great programme. It really brought out the potential that we have for future design. And I think we do have interested parties in that design at the moment. So if you look at the markets quickly, current project in defence, M55 upgrade, potential interest in our donor ship to return it to a mine hunter. And then you'll see the picture on the left here is the last time we built major sections for a submarine. And with the Australian, US, UK submarine programme, that's something that we see there's real potential in, given that we're one of the few shipyards in the UK that's actually built parts for a submarine in the past. And I think, in defence market, it's all about getting the right partner, the right experience for the job, with the right risk level. You look at the commercial market again, a Greenland mining project that we've just finished, replacement dock gates, barges, pontoons, fishing, agriculture. Energy is really LNG carriers, FPSOs, manifolds, nuclear structures, and the like. And look, cruise and ferry, again, one of our key markets. We've docked over 150 vessels since we commenced operations, 25 live cruise inquiries at this moment in time, with electrification, Scottish shipbuilding programme focused on CalMac from Methil and Arnish. That's some of the areas, and I think there's obviously the Isles of Scilly down for Appledore, and I think some of these larger cruise ships, when they're in refit, has got more than 3,000 people on board during a refit. When you look at the renewable markets, you've got jackets, you've got floating wind, and again, huge market, billions and billions of pounds. And look, we've got a key place to play in that as they start taking CDF over the next few months. We'll start to see some of that work being released, along with the CTV, SOV market. Team Resolute, we've spoken about this in quite a lot of detail in recent times. Joint venture relationship between Harland Wolff, BMT, and Navantia, the Spanish shipbuilder, who's delivered multiple ships on time, on budget. And we're really doing a lot of technology transfer from Navantia to make us into one of the UK's leading shipbuilders. And I think by having Navantia involved, it really reduces our risk profile. When you look at the gas storage project in Island McGee, obviously everybody will be aware we've got a judicial review next week in Belfast that we hope to prevail at. We don't see any reason, and even as early as today, I've gone through the recent round of document and court papers that's going in. We still believe we're in a great position to get the judicial review over and done with, and really get that project stood up so we can actually get on with the construction of it. I think there's huge future potential for getting that project into hydrogen in later years, subject to regulatory approval. And I think why it's so important really is the need for energy. And I think with the Ukraine and Russian situation, gas storage is more important than ever. As you can see from the chart on the left, the amount of gas storage in the UK is particularly poor and puts us towards the bottom of the ranking list for storage. And I think Northern Ireland also becomes more challenging given the 100% reliance on imported gas from the mainland. So I think the project gives us 19 days supply of gas for the whole of the UK and 60 days for Northern Ireland, and the store will hold around 500 million cubic metres of gas. So, we've got lots of opportunities around the project, from a complete sale of the project to a farm down, traditional oil and gas farm down arrangement, which will leave us with a 25-30% of the programme, to acquiring a loan through the National Infrastructure Bank to actually develop the project, given it's a strategic national asset for the UK. So I think, look, we're not getting too carried away. We'll get through the judicial review, then we'll look at how best to proceed with the programme after that time. But I think we've done a lot of work recently in relation to hydrogen, what hydrogen means. And I think when you look at the large development of wind farms around the coast of Ireland, certainly one scheme that becomes very appealing is the excess energy from wind getting converted to hydrogen and stored in caverns. But as I say, that's a development further down the line. So I think, look, just to summarise where we are, continue to build and convert the pipeline to increase sales, execute the 200 million refinancing. We don't have any plans for a capital raise and dilution at this time. Deliver the CapEx upgrades of 77 million that we've got ongoing in Belfast. Continue to grow the team and bring more expertise into the business, and deliver the prefabrication works for fleet solid support. If we get all that right, we'll deliver our target revenues. We'll get a margin that we're looking for between 24 and 27%, establish a balanced capital stack, and achieve annualised cash flow break-even in financial year 24. And I think, look, it's all about delivering returns for our shareholders. So I think that's where we're clearly focused, and it's all about delivering and converting projects. So look, to summary, market positions firmly established, contracts won, numerous contracts through SAIPEM, M55, Cory, Cruise and Ferry, backlog of contracts, 900 million over 7 years, weighted pipeline of 3.6 billion, 200 million of refinancing expected to close 2023. And look, we're in a great position to capitalise as we move forward. So that concludes the presentation, Donald.
Okay, that was fantastic, John. That was really good. That was a great summary of the business. Let me kick off by asking the importance of this FSS and all the what seems to be relatively small amounts of money, small amounts of revenue. You've got 25 million this year, 25 million next year, then you've got the 77 million recapitalisation plan. But in reality, what it appears to me is you're actually laying the foundations for future success. So tell me what's happening in the short term and how that will build into something quite powerful for you in the future years.
I think when you look at where we are at the moment, Donald, I think we've come from reactivating the yards, and you can't just start work on a 1.6 billion contract overnight. So these foundation projects we're working on now, it's really all about building the skills, building the knowledge of how to operate the high-tech equipment that we've got, the robotic welders and things like that. So it's really building that up. And I think with M55 down in Appledore, we've been doing some subcontract work for BE Systems down there as well, fabricating structures for them. So it's all about building that skills in base up. And I think we're up to just short of 800 employees now across the group. So it's building those numbers up. It's building the credibility up. And I think being able to deliver the programs that we've got on time, on budget, and make money, it's just beginning to grow and grow and grow. And I think the level of work that's out in the market at the moment and the stuff we're tendering, we're starting to see now a real drumbeat of projects coming through. I think one of the unfortunate things is with some of the NDAs that are in place, it's really difficult to actually share information on every single project that we are winning, but we continue to win projects on a week by week, month by month basis. And I think that the Belfast shipyard, certainly over the last few weeks, has been jam packed.
So I think it was over the last 7 years, you said you're expecting, over the next 7 years, you're expecting 700 to 800 million of revenues to flow through the business from the FSS subcontract. So how does that all position Harland Wolff for the future?
Well, I think you have to look at the next couple of years. This year and to the end of next year is really about the infrastructure and the infrastructure upgrade. We had our first quarterly review meeting with the client last week. That everything went very well. Client's happy. Our direct client, which is Navantia UK and the Ministry of Defence, everybody was happy with the progress that we've made. And I think you already see demolition work happening in Belfast. So we're moving things around in Belfast to make room for the extension to the construction hall and the panel line. So it's really, this next 2 years is engineering design, actually acquisition of materials, equipment, supplies for that project to get moving. And then as you move from that stage into test pieces, we get the test pieces done, then we'll move into eventual production in January 2025. So look, it's a really exciting period for us. And, you know, we're already working hard to try and get ahead of schedule to build some more float into the programme as we move forward, you know.
Now, you mentioned the impact of inflation on the FSS bill, John. There's 100 million number floating around. Does that number come from you? Is that the number that you think inflation will add to the project?
I think the 100 million number that's floating around in the market, Donald, is a number that one of our competitors announced to the market earlier on, but late last week, that they've not included inflation in their contract. I think one of the things we did was we included inflation is an addition to the contract from day one. So we're clearly protected from that. Inflation is accounted for over and above our base costs.
That sounds very wise, John. So for you, inflation is less of an issue because it's wrapped up in the terms of the contract.
Absolutely. So I think it's something that, we look at, and, we've not built any money in for inflation. Clearly, we get inflation as it actually happens. And I think, look, for us and the size of the business, that's one of the risk mitigation measures we put in place early doors, so we didn't really get caught out, because I think, look, anybody's guess is where inflation may go, No,
I appreciate that there are NDAs and so on in place, but if you could do your best to summarise the latest contract wins, and even if you could summarise those wins which are within touching distance, but you can't quite get there and can't quite tell us about them, tell us as much as you can about them at the moment.
Well, I think if you look through the markets, starting in the renewable market, we've got 44, 45 different programs. There's some test programs and test pieces that we're hoping to secure this year in the first half. Then that moves on to the larger programs. We've got some new build vessels for Appledore that we're very close to, both from a commercial and a cruise and ferry market. And I think if you move into the cruise market, really more than the ferry, we've got multiple cruise ships that we've got verbal bookings for. We really just need to tie them up and get them into a contracted position.
So which of the different markets do you see as the hottest at the moment, John?
Look, I think you've got a mixture. I think you've got cruise and ferry that is very hot. I think you've got renewables that will be becoming very hot as you get into the end of next year. But I think, look, this commercial market, given the number of vessels that weren't dry docked during COVID, you're really starting to see all the extensions of time running out. So we expect to see a big surge that the level inquiries would back that up. So I think, look, those markets are fairly buoyant. But again, oil and gas, I think the pennies eventually dropped, that there won't be an instant transition to renewables. So we're starting to see a lot more activity on the offshore oil and gas space. So I think, look, Donald, we're fairly good across all markets, and I think we just need to really keep pushing and just keep delivering programs,
Okay, interesting answer there from you, John. What about Searows? What about the Isle of Scilly replacements? Now, I've been reading the London South East Bulletin Board, so I do actually know what the Isle of Scilly replacement is.
You know what, Donald, you're always good at coming with some specific questions.
That's me.
Isles of Scilly, we've been talking to the guys at Isle of Scilly now since we first acquired Belfast. So that's not a new programme to us. We've been looking at it in great detail. We expect final bids to go in for that in the next few weeks. And look, that's an ideal project for the vessel to be built. We built the last vessel, the Solonian, in Appledore, and it's still going after many years. So hey, look, we'd like to try and acquire that and get that programme in. Searows, again, it's a programme that's been in Belfast before. Massive programme, massive scope of works. We've done it before. We've proven we can do it before. So look, hopefully we can get that over the line. And I think there's a large volume of CalMac ferry work out there. I think the facilities we've got and the track record that we're building, we stand a great chance on that also.
Indeed, and you've got a Scottish CEO as well. That's going to help.
Well, we can all but try.
Now, funding. You mentioned in your presentation that you've got 200 million of syndicated debt facility potentially at the end of June. So let's put some meat on the bones of that for us, please.
Look, I think there's only so much I can say on that one, Donald. I think we've been fairly clear on the need for the funding. It's really to make sure our growth continues at the rate of progress that we want. We're adequately capitalised so that, you know what AIM's like. Every 2 minutes, if you're not announcing something, everybody expects a fundraise. So I think, look, we're just trying to put this whole concept of funding to bed once and for all. The facility's split. We don't have to draw it down all in one go. We'll draw down what we need as we need it. We'll clear the business of all other debt that we've got in the business, and we'll really focus in on having the one debt package from a UK company, which will be at a substantially lower rate than the existing debt that we've got in the business. And I think that comes because of the credibility that we're now establishing. The risk level for anybody incoming into that debt space is a lot easier, and it helps with the UKEF guarantee that hopefully we get attached to that funding. So it's probably taken a bit longer than we wanted it to take. We were hoping to have it done. But look, it's all about getting the right rate so that we can right-size that for the business rather than, paying too much for debt in the short term.
And do you see that as a major de-risking moment?
We do actually, because I think it's one thing when you look at the share price. I mean, we announced a £1.6 billion contract, and the share price went down. I think it's one thing that everybody looks at is to say, okay, so yeah, you've got the work, but how do you have the working capital to deliver it? Look, I think that's really, it is the moment that de-risks it by saying, okay, we get the working capital's in there. And even though the programme itself is milestone payments, progress payments, look, this just takes away for the avoidance of doubt,
Okay, let's rattle through some questions from our the London South East website next. Kevin Halpenny, he's a retail shareholder, and he asks, how difficult is it going to be for the company to manage health and safety, recruitment and retention of a new workforce, manage industrial relations, by which he means the unions, I think, considering that you're going to be operating across 5 different locations? How do you avoid the pitfalls that could so easily derail progress?
Well, I think that happens by the structure that we've put in place. We've got a matrix organisation with our functional leads, and then each site is classed as its own delivery centre with its own general manager. So I think it's all about the structure you set up, the support that's provided into those individual sites. And I think the work we've done over the last 3 years in building up the teams, getting the experience in. I think, we've got team members, a new programme director for FSS, for example, has come in from Canada on the Coast Guard programme out there. So I think it's about bringing the right level of experience in that can deliver for us. So I think, it's all about the process and the time and ramping up steadily. And I think so far, with the number of vessels that we've had through the yard, the number of structures that we've now fabricated, it's proven that the strategy that we've put in place works. But eventually, we will end up bringing in a COO into the business as we continue to expand, because that's the only way to really manage the business effectively,
Okay. You mentioned the Isle of Magee gas storage scheme judicial review, which starts on the 4th of May. It sparked some interest from shareholders. Clearly it might. And Trevor Draper asks, should the Isle of Magee ruling go in the company's favour, what are the company's preferred financing options? Which is not a bad question.
It's not. And look, I think we've got three different options, as I mentioned earlier. We either go down the direct sale of the programme, we go down a route of farm down, or we go down the route of a loan from the National Infrastructure Bank, given the strategic nature of the business. And look, I think it's one of the things where we've sought a bit of feedback from retail investors at the recent evening we had in London, and we've sought it from institutional investors, really to get a flavour of, would people like us to reduce the debt level in the company and not take the project on? Or do we actually push ahead with the programme, given the healthy return that would come out of it? And, we only know that hydrogen in the future will become a more volatile market than natural gas. So we think there's a huge amount of potential. And at the moment, we're actually modelling what the revenue flows in that project would look like. So I think it's a bit early to nail it. I'm just more focused on next week, get next week out of the way, and then see where we go from there. And I think, look, there's obviously options on Isle of Magee, depending on what the outcome of next week is. Certainly, regardless which way the judicial review goes, we still have options in both cases,
Okay. Long-term holder Lee Harrison asks, could the company produce an updated valuation for the gas storage facility, please? And with that in mind, how much would a wholly owned project add to the market cap of the company?
Well, I think the market cap to the company is a really interesting one, and I think it's not something I'm willing to speculate on, because I think every time I think we've got a programme that's going to change the market cap, then it doesn't happen. So I'll make the decision to remain silent and see if it has more of a positive influence, I think, look, in relation to the value of Isle of Magee, I think it's an interesting one. I think the one thing with the delay that we've had, it's really increased the value of Isle of Magee. We've had no formal valuation. We've had various people sniffing around, indicating some numbers. And I think when you look in the millions, it's certainly high double-digit millions at the moment. Maybe once the outcome of the judicial review comes, we might push up into the 3 digits. But look, early days, let's see where we get to. And I think it's a really hard asset to value. And I think until you win the judicial review, you put the programme in place to build the project, you run the numbers again, then, the valuation will become a lot clearer, Certainly substantially higher by multiple times of what the company's invested in it to date,
Do you have any sense of when to expect the announcement from the judicial review, the outcome?
I've never been one to speculate on the judicial system, Donald.
It's been very slow to this point.
Every time you think it might be quick, it always lets me down. But look, in most judicial reviews, you're really talking 8 to 12 weeks, I think.
Okay. What are you doing to attract institutional investors to buy in the open market, says David Wynn and Lee Harrison? And what role does Liberum Capital play as broker?
Well, I think one of the things we're looking to do is we grow and we're getting bigger. We're really looking to say, okay, how are we engaging with shareholders when we look to balance the equity stack in the future? When is the right time to do that? Is it 2 years down the line? Is it 3 years down the line? When is the right time? And it's to really get some guidance on what the best way to go about that. So that's Liberum's position. It really just gives us a different view to the view of our main broker, Senkos. It just sort of gives us a bit of a cross-reference. And when you look at the first part of the question, again, I'm trying to think what it was again, Donald.
Well, that's it, really. How do you attract institutional investors, and what role does Liberum Capital play?
And I think the institutional piece is interesting. AIM, in my view, is in turmoil at the moment. AIM's becoming a market that a lot of people are taking their funds out of. You've had a lot of redemptions in funds. The share price does drop off a bit. You then hit the triggers and you go outside areas where people are comfortable in investing just purely based on market cap. So I think, look, we've had a little bit of a rough ride on the back of winning FSS. Something that should have really boosted the market cap is gone the other way. But I think it's all about continuing to deliver, Donald, and win more work, deliver on the revenue targets that we've made and set for this year. I think we do that between now and the next 18 months. When we get to our break-even point, you'll really start to see institutions coming back on board. And I think, there's more than one institution apologised that they had to leave, given where they were in their own internal position. So, look, I don't doubt we'll have institutions, some that have left, back on board again. It's just all about timing and the market conditions,
Would you see yourself as more comfortable in the main market, perhaps?
Well, it's something I think we spoke about maybe 2 years ago, where we were looking at the main market, and I think it's certainly something that I'm still fairly attracted to, because I just think it's a lot more stable. And I think when you look at our competitors, as we come out of fleet solid support, both being on the main market, it probably makes a lot of sense to look at that. And I think, that's one of the other briefs that Liberum have got, is to give us some advice around that,
Okay, quick question from Michael Vidal. You've previously mentioned possible contracts in relation to demonstration units for floating wind. Floating wind has got to be a big area for you guys.
Absolutely.
When are we likely to hear more on this?
Well, look, again, we can only be guided by when the operators get themselves to the table and start awarding things. Look, there's 3 or 4 projects that are imminent. I think I've been saying they've been imminent probably for the last 2-3 months. But look, there's some really nice, tidy little projects that will be a great way of us demonstrating our credibility and our capability coming up soon. So, look, we're certainly hoping in the next few months to have at least 1 or 2 of those over the line,
Great. Final question altogether from Lee Harrison this time again. How much, and you can answer this briefly, how much of the £4 million performance bond was received back from Saipem? 100%. Fantastic. Thank you, John. That was absolutely terrific. And we're going to call it a day there. Thank you so much for joining us. You're from London today. I'm used to you being in Appledore and Belfast and all sorts of more exotic places, but it's boring old London for you tonight.
Absolutely. Thanks very much, Donald, and it's great to talk with you again.
Thanks, John. That was terrific. Thank you so much.
Thanks. Bye.
Next up, it's AIM-listed TechMinerals, which operates at both ends of the battery metal spectrum. Not only does it explore for battery metals, but TechMin announced environmental agency approval for the UK's first industrial-scale lithium-ion battery recycling plant in Wolverhampton this morning. The share price jumped 14% initially on the news. Sadly, it only ended up 5% on the day, giving TechMin a market cap of around £37 million. I'm delighted to be joined live this evening by Alex Stanbury, and he is the CEO. Welcome, Alex.
Hi, Donald. Good to be here. Thank you.
Fantastic, Alex. It sounds as though it's been a roller coaster year or so for you guys.
It certainly has. It's been a lengthy process. This obviously, it was a great joy to announce this morning that we are now fully licensed at Wolverhampton. We have all our permitting, all our licenses, our ABTOs, everything in place, ready for operation.
Now, I'm going to ask you an emotional question, Alex. Given that you've been through a long slog to get to this, what does it feel like? What does it mean for the team?
It feels great. It's really, really exciting. I mean, it's taken a long time to get here, and it's really nice to close off what we consider to be phase 1, which is the building of our proprietary lithium-ion recycling plants. And it's the UK's first industrial-scale lithium-ion recycling plant. And we're now into phase 2, which is operations. And all the conversations we've been having over the last few months about supply of front-end battery feedstock from across all sorts of industries, we can now come to fruition. There's such a pent-up demand in this country for lithium-ion battery recycling. There's no one doing it. Everyone's having to store, and those that aren't storing on the smaller side, unfortunately, putting their batteries into landfill, which is causing landfill fires. It's causing fires in the recycling centres as they've all been going into the wrong bins. So there's a huge amount of demand in this country for it.
Bad news for them, good news for you. Okay, we're looking forward to hearing your presentation tonight, Alex.
Thank you. Okay. 1 second. So I'm Alex Stanbury, CEO of Technology Minerals. Some of you have met me before. This is the rest of the team. Got Chairman Robin Brundle, who I think some of you have met before as well, CFO James Cable, and on the mining side, Lester Kemp and Wilson Robb. The group structure of Technology Minerals is TM plc, which is listed on the standard list. We listed in November 21. And there are two sides to this business. Firstly is the minerals exploration side. And the idea is we're a circular economy for battery metals. So we look at a dual track. Firstly is exploration for virgin extraction of the critical materials that make up the cathodes in lithium-ion batteries. And then the second side of that is reclaiming these metals from used lithium-ion batteries, from anything from trains, forklift trucks, EVs, vapes. So it's a dual track for supply of critical metals, of which there's a massive shortage globally. Under Recyclers Group, which is currently 49% owned by Technology Minerals, sits Libat, which is 100% owned, and Halo, which is 100% owned. Libat deals with the lithium-ion battery recycling. Halo deals with the lead-acid battery recycling. So we're about creating a circular economy for battery metals. We're looking for the raw materials. We're also reclaiming the raw materials. At the moment, our processes take in the recycling side, take those reclaimed lithium-ion batteries and take them back to a substance called black mass. It's that black mass which contains all the critical materials, which are so in need for creating new batteries. And the next stage of our process will be to try and provide for the UK a capability it doesn't yet have as well, which would be the separation of that black mass into its constituent parts. At the moment, we set ourselves up to be a problem solver because the UK is so desperately in need. So we take the batteries and we recycle them into black mass, and that black mass is then a commodity that gets sold out to commodities traders and those who have the refining capability. But we're in close conversations with the government here, and that supply chain is missing in its entirety in the UK at the moment. As you know, there's a little bit of lithium extraction going. Well, it's planned in the southwest, and then there's a lithium refinery planned up in the northeast. But in terms of recycling of batteries and then the separation of the materials within, that doesn't exist here. So anything any of that, all those materials need to be shipped abroad, which is obviously not much good for what the UK is trying to achieve. So there's a big supply chain gap that we're trying to fill. Okay, so the business overview of Recyclers is again two sides. So we have lithium-ion battery recycling, which is in Wolverhampton. As we've said, we now have all the permits and licenses to start our operations there, and lead-acid battery recycling, which is in Tipton, just outside Birmingham. That is awaiting its final permit variations. Unfortunately, just delayed due to the Environmental Agency being hugely backlogged from COVID. They unfortunately were needed to lay off an awful lot of people at the beginning of COVID and just trying to staff up again now. So they're doing things in sequence rather than in parallel. So hence why we got Wolverhampton first, and we will get to Tipton, we expect within about 8 to 12 weeks. This is a slide on the battery recycling market. I think there are over 320 gigafactories in the pipeline now, all of them needing, most of them needing nickel, cobalt, and manganese for the cathodes and lithium. So there's the, 500,000 metric ton deficit by 2030. So there just simply isn't the pipeline of projects, be it in recycling or in virgin extraction, to fill that deficit, which is why we're coming at it from both sides. We obviously believe fully in the recycling market, but the recycling market can truly only ever meet about, in the near term, about 20% by 2040. So there still needs to be the virgin extraction. There's been a massive underinvestment in the junior mining market. exploration market in the last decade, really. And from zero to a mine, it can take at least 10 years. So that's the reason we have the other side of the business, which is the mineral exploration. It's an option value. We operate it as a capital light business, but it means that we can come at this with from two angles and really ride the increasing demand. So the business model for recyclers is front end. So we're a processor of batteries. So we need front end feedstock, and we do that through we get that feedstock through pent up demand here from the OEMs, from electronics manufacturers, but also we have a logistics partner in a company called Slicker, which I'll come on to in due course. But they do collections around the country on our behalf. They're already picking up their hazardous waste and oily rag, so waste oil collector, and they wanted another string to their bow. So we have a very symbiotic relationship with them, whereby they will pick up the lithium-ion batteries from all the OEMs and so all the car dealers, etc., that they already service. And then obviously on the back end of that, we process in the middle. On the back end, we end up with black mass, which is a commodity that's very easily saleable. It contains all the critical materials, and those critical materials are much needed by all of the commodities traders. And so we have already sent out samples to about 9 major institutions, and those 9 majors have come back and all said that they want the entirety of our offtake. Now, as obviously it's up to us what we do with it, and we'll see what the best terms are and how it's going to work for us best, in terms of either signing up with one, if they're going to give us the terms we require, which could be some further cash for expansion, or we'll look to put the black mass into an auction. We have all the laboratories, etc., on site so that we can test the quality of our black mass as well. So the revenue streams for the recyclers, again, for the lithium ion side. Lithium ion is novel in terms of the recycling, so we can command a gate fee. So people pay us to take their lithium ion. They can either bring it to the gate, or we will collect it with our logistics partner, but we get paid to take it. Then we process, and then we sell the black mass. So we've got two streams of revenue on that. And then on the lead acid side, it's a much older industry. But it's still one that needed cleaning up, and that's where we came in. But lead is linked to LME, so we buy in the batteries, we process them, we sell out the plastics, and we sell out the lead, and we make a margin. It's a simple business, but it's a nice one with solid, stable margin. So whilst we were looking at and discussing with all the suppliers of lithium-ion batteries for us and all the people with the problem, we saw another part of the supply chain that was missing, which is that lithium-ion batteries are incredibly dangerous to transport. And there have been, as I said, a number of fires, both in the recycling centres, landfill, and also there have been some sort of notable fires in transportation of automobiles as well that have taken out. I think it was £500 million worth of automobiles last year on a ship. So the transportation of lithium-ion batteries is incredibly dangerous, and there was very little in the market for transportation. So we have our own cutting-edge ADR-compliant certified storage boxes, which we have created on site and we build on site, and these are now ready to go. And as soon as now we have our permitting, and as we will start to sell or lease these to various insurance companies, logistics companies, car dealerships, etc., so they can all have them on site. So any lithium-ion batteries that they have lying around can go in this, and that means if there's a thermal runaway event, which unfortunately happens more than one would like, which is where the lithium-ion battery starts to break down from the inside, and suddenly that gets extremely hot, bursts into flames, and it's incredibly difficult to put out. And obviously then that propagates fire throughout warehouses or wherever. This will avoid that. This can get to 2,000 degrees on the inside and only get to 80 degrees on the outside. So for transportation and also for storage, this is a really very necessary solution. And now we're in a position where we can actually service these boxes. So we can give them to people, we can lease them to people, we can sell them to people, and then we can go and pick them up. So take the batteries out of them, process them through the plant and give them back an empty box. Previously, obviously, we couldn't process the batteries and we had no storage capability on site because we weren't licensed. So we've been waiting for this moment that we've now got all our licenses, and now we can push this business model as well. So it's very exciting. As mentioned earlier, we have a partnership which is logistics based with Slicker Recycling. It's as simple as that they have 9 depots around the country. They do 25,000 collections a year. They are a waste oil collector, but they wanted another string to their bow. They have call centers, etc. So it saves us a huge amount on costs on logistics. We don't have to do our own logistics; they can do it all for us. And it's as I said, it's a very symbiotic relationship. So very exciting to be kicking that off properly now as well. We also have R&D partnerships. We've had a long-standing one with Warwick University now, who have been a knowledge transfer partner for recyclers. And then with the University of Birmingham more recently, and we just got awarded £1.96 million on an Innovate UK grant. And that grant is to create a small recycling, lithium-ion battery recycling mobile unit, which would go onto the back of a lorry. In due course, it could be an electric lorry, but it means we can go to the source of the problem. So rather than having to have everything come to us, we can do mobile collection, which is great if there's a battery in imminent danger. But also the government's intention is for lithium-ion batteries to be able to be picked up curbside. So there'll be another bin, whichever color it may be, where you pop your lithium-ion batteries into it, be it electric toothbrush, whatever you have at home that's now defunct. Rather than it going into the black bin, it goes into that bin, and we would come around and collect it. And this is very much on the government agenda, and we're in close conversations with the likes of DEFRA about this. So it's very exciting. So the key milestones for recyclists really. I've just been through them, but we now have our first lithium-ion plant about to start running. It's going to take us about 6 weeks to put in the final stages. So we wanted to wait until we had the feedback from the environmental agency before we started spending money on the fire suppression systems. So the plant itself is built. It's just the external fire suppression now we're putting in, and some ducting to do with ventilation. And within about, I think it's going to be 4.5 weeks from now, we should be ready to put our first batteries through. So very exciting. We have a first mover advantage in the UK on lithium-ion battery recycling, and as I said, there's no one else here doing the front end, so the demand is huge. So yeah, very, very exciting. And then on to the other side of the business, which is our global exploration portfolio. We have projects in the US, Ireland, Northern Spain, and Cameroon. Our US projects are in Idaho. We have 2 projects. They're centered around cobalt. They surround Jervois. In South Dakota, we have a polymetallic play, which we've earned 10% of, and I think we're probably going to leave it there because we have plenty of other things to focus on. In Ireland, we have our lithium project, Northern Spain, a nickel copper cobalt project, and Cameroon is a big nickel laterite. We have gone across the suite of battery metals. They seem to sort of pop in and out of favor. Lithium is definitely the metal of the moment. Cobalt was, and at the moment it's taking a bit of a backseat to nickel because the cathodes of the lithium-ion batteries, the NMC, which is the dominant cathode, has become nickel dominant. So suddenly there isn't enough nickel in the world. Well, we've got a couple of very nice nickel projects, one laterite and one sulfite. And then our Irish lithium project has really been getting a huge amount of attention. We were at PDAC recently, with a 26 kilogram boulder of spodumene that grades at 3.75% lithium dioxide. And I can't tell you the attention that got from everyone walking past. Even the Australians were quite aghast at what a nice piece of spodumene it was. So we come out of that with NDAs in place for both Spain and Ireland for companies wanting to joint venture into them. So it was a very worthwhile trip. The northern part of our Irish project is under joint venture already with a company called Global Battery Metals on the TSX-V, but our southern portion remains clear. So we're looking for a partner for those. Then we have our Idaho projects, as I went through a second ago. We now have got combined between the Blackbird and Imperium, 18,000 acres with 21 drill holes permitted. And we sold 10% of that last year for £900,000 and we have another 20% under option at the moment. And we expect to be able to transact on that this year in one way or another. Astamet in Spain is our nickel sulfide project, which has also got a lot of cobalt in it as well and copper. And this was an old mine. So we are chasing a historic resource, and you can go into the mine and see the mineralization. It grades extremely high, up to 28% copper, 1.88% cobalt, and 1.68% nickel. That's from the grab samples. Existing mine that was closed down in the 1950s just due to the dip in the copper price. This would obviously be a very profitable mine in today's terms. So we're there doing underground safety work and other geophysics, ready to drill in the second half of this year, and we may well have a joint venture partner on at that point in order to pay for that drilling. Leinster in Ireland. This is our lithium project. So as I said, we've been getting grab samples and of up to 3.75% lithium dioxide. A very exciting project, especially with the focus on lithium globally at the moment. It's really got everyone excited, and for us, it shows a huge amount of option value. Cameroon is our largest project in terms of land, in terms of land. We had various issues with that during the year to do with where the licenses sat. It took us until very recently to get that sorted out. We now have it valid under Cameroon law. So as of this week, we've literally been out doing our first exploration there and putting beacons out on the site on all of the licenses. So what comes up next is some geochem, some soil sampling, lithographics, lithochemical sampling, all of which we'll be able to announce soon. South Dakota is a project that is a nice polymetallic project, but at the moment we've got enough focus on the rest of our other projects, so we're leaving this one be. So we've had a really fantastic couple of months after a hard slog. We've got our licenses. We've raised £2.5 million from a high net worth investor who showed good faith in us, and that allowed us to retire our banking facility. The banking facility had been a necessary part to get us through the period of cash burn whilst we got our licenses and finished off plants, etc. But now we have a long-term investor on board, and that will get us through to cash generation at Recyclus. We also we are doing some manual braking of batteries on the lead acid side at Tipton, and are looking forward to getting the variation in license there, which will allow us to automate the processing. And at the moment, it's making small inroads into our overheads, but it won't be long before we are cash flow positive, which will be a very nice place to be. So that's it from me. Q&A, I presume.
Okay, Alex, tremendous. Thank you so much. That was really good. So you said my question was, when exactly did you become operational? But you told me 4.5 weeks time. Tell me what you do in those 4.5 weeks, and then tell me what happens after that point that makes you cash generative. Talk me through the process. Give me the detail.
Sure. Well, at the moment, we're just on site, finishing off the fire suppression systems, and also building a safe space for the lithium-ion batteries to be stored. We can store 100 tons a day on the site, which is a lot of lithium-ion batteries. So we need to make sure that should anything go, should there be any fire issues that can be contained. And so that's what we're up to at the moment. It's just literally those last bits of building going into place, and then the ducting work for the extraction. Because obviously, when you're processing the batteries, you don't want any of the black mass or going into the atmosphere.
Okay, how many tons? How many tons of lithium-ion batteries do you hope to recycle in the first year, for example? That seems like a fair question.
Well, if you ignore the ramp-up period, then 8,400 tons a year, and we have the permitting to do 22,000. So that the 8,400 is on a single shift, 5 days a week. So there's plenty of scope for increase from there as well, and sweating the asset more.
And what are your thoughts on sweating the asset more? Is that something you would like to think about?
Yeah, absolutely. Of course, we want to get ourselves up and running, and prove the input, prove the process, prove the output, get everything well oiled, and then we can look to increase the throughput there as well. But we'll also be looking at building site 2 very shortly as well. So that's the next thing, is looking for site 2 for both the lead acid and the lithium ion.
Okay, so hold the site 2 thought there for 1 second. As you say, Recyclers owns the IP for both the process and the plant. You talk about Recyclers during that presentation as we and us, which I thought the language was very interesting. They've got plans to construct 5 more lithium-ion recycling plants. Some of those potentially designed specifically for OEM clients in the UK. All fascinating stuff. So. What happens with Recyclers? Will Technology Minerals take over Recyclers, and how will it work in the future?
Absolutely, I know it's the narrative-wise, it's we are very very much conjoined.
Are you conjoined? You conjoined. I can hear that when you speak, but it's not a them and us. You're conjoined.
Oh, well, I happen to have founded Recyclers as well, so and obviously sit on the board. So
and Richard Brundle as well.
Yes, so splitting the narrative has always been a tricky one, which is one of the reasons that we're bringing it together as well. We kept it apart, and originally for EIS reasons and government grants, and then realised that from EIS wouldn't have worked just because of the narrative, and the government grant side. Well, the government love both sides of the business because they're missing both those parts in the supply chain. So yes, an offer's been made and accepted, and the heads of terms have been agreed. We had a long back and forth with the Financial Conduct Authority at the end of last year about the form of this acquisition and how it would sit, and the documentation required. Mm-hmm. And we finally came to an agreement with them in January. What wasn't clear when we got into it was what the directives would be, what we needed to do. So they gave us those list of directives, and we're working through them now, including a back audit of subcodes, et cetera. So we're working through the process, but we've also been focused on delivering Wolverhampton and the licenses. But the work's ongoing from an abridged perspective at the moment. So we're hoping that we can close out that transaction this quarter.
Okay, so I can understand why you're looking a little bit weary, Alex. Dealing with the FCA at any level is quite a tricky thing.
Absolutely, and the takeover panel and everything else.
But you poor man, that's a lot. That's a lot to deal with. You maybe have already answered all this, but the big question asked by many, and it's useful to give our audience a name check. Let's name check Lee Williams, Peter Roberts, Suad Gesuda. When will the acquisition of 48% owned Recyclers Group happen? Now, is it just as the months go forwards, it will definitely take place?
Yeah, it's there were various things in there. We've been, quite frankly, a little undercapitalized because we expected to get to cash flow positivity earlier, mm-hmm. But environmental agency delays have just meant that we've had to sort of tick through, and it's been a slog. But with that, we want to make sure the cash is going to the right places. So the cash has now gone to the right places. We've raised some further capital. We've got cash on the balance sheet. We're about to become cash flow positive, which changes the dynamic of what we're up to. And
when will you become cash flow positive?
It really not going to take long. It won't take long post the beginning of operations. Our business model is extremely lucrative with the fact that we get gate fee and we can sell the black mass, as well as obviously the as soon as we can get Tipton up and running, there's good cash generation out of there.
So let's say on the lithium-ion battery front, let's take it a year into the future from the start that you actually start, from the moment you start processing. Give us a sense of what your revenues that you'll generate will look like.
I'm not sure we've put those numbers out there, but certainly
that's why I'm asking clearly. Tell me what you can tell me.
Well, we can certainly get payback extremely quickly, and the business model that we put out there is one that's self-funding, and it allows us to self-fund another plant of each type each year. The only reason that we'd bring further capital in is just to accelerate that and to take advantage of our first mover advantage rather than let the competition catch up with us. At the moment in this country, we have that first mover advantage, so it makes sense for us to capitalize on it as much as possible.
It does indeed. So which is more profitable, the lead recycling plant or the lithium ion recycling plant?
The lithium. By some margin, but the lead is still a very nice business, and it's an industry that needs cleaning up. Most of our expansion plans, and we are obviously discussing potential expansion in the US and potential expansion in Europe, and all of our expansion plans really just all focused around lithium ion. Our lead acid will be for different markets, but it's not a real focus for us outside of this country at this time.
And your ambitions at the moment stretch to 5 new plants, some of them designed specifically for OEMs. So talk me through all that. That sounds fascinating.
Yeah, we are planning on another plant each year for lithium ion, but we are also just that sits within the business model. But outside of our business model is providing plant to OEMs and battery manufacturers. So our process is modular, so we haven't built huge plants. It's affordable. So those the battery manufacturers who want to be able to recycle on site, which they do, means that they can put our modules into their factory. And because we operate because of the IP within our process, we don't go above 80 degrees. So it's very easy for them to have within their factory and within the factory limits the noise levels. The most noise we make is because of the fans. So, it's earmuffed territory. So again, there's no issues there. So it means an OEM can take in year one, could take potentially 3 or 4 of our modules and put them in, because a gigafactory in year one has up to 90% waste and that needs recycling. The tolerances are so tight in terms of their manufacturing. But obviously in year 2, that changes dramatically.
So let's be clear, they make lots of batteries which have to be recycled themselves because they weren't up to scratch.
Huge amount of battery scrap off the factory floor that needs to be recycled. Yeah, so we're in discussions with them about providing either on a lease or through acquisition our plant, and then they can scale them back as they're on skids, and they can fit into 540. Our entire process can fit into 540-foot containers, so we can then remove.
What are the main constraints to ramping up the size of the business, would you say? Capitalization? Are you still?
We're in a pretty niche space here. We're in a pretty niche space. We are the only people doing this in the UK, so we have a huge amount of interest in what we're up to. So I don't think, currently, obviously, the cash on our balance sheet isn't that large, but we have a huge amount of interest. So if we decide to accelerate this quickly, the support is there. So it's really just getting started, getting to grips with the market, getting our offtakes in place, getting processes in place, and then we can roll it out pretty quickly. So yeah, there's no reason we shouldn't be able to multiply this business very quickly.
Great. Now, Thomas Cooper asks, do you have contracts lined up for the sale of the black mass? You've answered my question, which is what is black mass for the uninitiated? So you've explained that one. And do you sell it on unprocessed, or will you extract the battery metals yourselves? And you've also explained that. But it's worth having another go at that.
Absolutely.
In the future, you would like to unbundle it and process it and do it for yourselves.
Yeah. So what we do is we do separate out the copper. We separate out the aluminium, the plastics, the papers. All from depending on what where the batteries have come from, and so we'll end up with copper that we could sold out separately, aluminium that's sold out separately, and then we're left with the black mass, which only contains the lithium, the cobalt, the nickel, and the manganese. But the value really sits in the lithium, the nickel, and the cobalt, and more the lithium is getting more and more valuable.
That gets processed elsewhere at the moment.
Sorry.
The black mass, the elements
Yes.
of the black mass left will be processed
Absolutely.
elsewhere.
So we take samples and we tell them what the constituent parts of it are, and it will obviously depend on what goes in at the front end because there are different chemistries. But we can take any of those chemistries, and we can create a cake mix of different chemistries for our off takers. But in terms of sale, it's a commodity. We've sent it to major players, samples to major players around the world. All of who have come back and said they want it all. So we have no fear of being able to not being able to sell it at all. So that side's fine. And the supply side's always going to be the trickier side. But as I said, we have a very niche position here in the UK, and there's no one else doing it. So that makes it fairly easy for us at this time.
On that happy note, Alex, let's say we're out of time and call it a day there. Thank you so much for joining us. That was absolutely fabulous, so interesting, and we learned a lot. Thank you,
Good.
thank you. And on to Aura Minerals. TSX and Brazilian listed Aura Minerals Inc. is a multinational mining company that fully owns and operates gold and copper mines in Honduras, Brazil, and Mexico, with projects at various stages of development in Brazil and Colombia. So that's main mines and other projects. The company is headquartered in the British Virgin Islands and operates from its corporate office in Florida. Yesterday, the company announced that Almas, its open pit gold mine in Brazil, has just started production, with 2023 production at Almas expected to be between 25 and 30,000 ounces of gold, ramping up to 55,000 ounces, I understand from Kleber. Now, Kleber Cardoza is the CFO at Aura Minerals, and he joins us live this evening. Welcome, Kleber. It's really good to speak to you again. How have things been since you spoke to us in March 2022? I don't know if you can remember that. I can. It was a very good night.
I can remember as well. Thanks for having me here. Good evening for most of you. Things have been very dynamic. Aura is a growing dynamic company. So I think there will be a lot to share, like in terms of updates on our recent past.
Perfect. Do you want to go through your presentation now?
Yeah, sure. So for those who, again, good evening. I'm Kleber Cardoso, CFO of Aura Minerals. Have been with the company now for over 4 years. For those who haven't heard of Aura Minerals, we are a growing gold and copper producer, focused with our operations in the Americas. A quick snapshot of our main accomplishments in the last few years. Aura has been ranked the number one on the TSX 30 ranking in the last 2 years. TSX 30 is the award that TSX gives to the best stock performance in Canada across all markets. Aura was the first and only so far to win this award in 2 years in a row. As I said, we are a growing company. We grew our production in gold equivalent ounces by over 90% since 2018. And with 3 operating mines in the Americas, 1 project in ramp-up phase and 2 projects to build, we expect to grow another 86% in the next 2 to 3 years and exceed 450,000 ounces of production by 2025. Besides being a growth case, we can say we also a dividend case. We have been paying a significant amount of dividends. In 2021, we paid 13.5% in dividend yields. It was the highest dividend in our sector in the world. And last year, we returned to our shareholders another 6%, including dividends and share buybacks. Just a quick overview where we are, where our operations so focus on Latin America, 3 operating mines. The 3 in red here in this map. In Mexico, we have the Aranzazu underground mine. Is the only operating mine that so far we produce copper. Is about 70% of our production in Mexico is copper, and the rest is gold. And then we have other 2 gold mining open pits in operations, San Andres in Honduras and EPP in Brazil. Those three operating mines produced 242,000 ounces of gold equivalent in 2022. And as we can see, we have several other assets in different stages of development, which are going to take the company to continue in this growth path. In Brazil, we have the Almas project. Almas project is a gold project, open pit, with 17 years life of mine, which yesterday we just announced the start of production. So we are ramping up Almas. We expect shortly to announce that we're going to start building another project, Borborema gold project in the northeast of Brazil. And next would come Matupá, also highlighted in green. So between orange and green, we have our growth projects to 2025, which are going to take us to another wave of increasing production in the next few years. Very quickly, a quick overview of our history. Not going to go over all the points here, but basically, Aura was first listed on TSX in 2007. Then in 2010, achieved the peak. Its market cap close to $1 billion Canadian dollar. And in 2016, because the company was underperforming, the market cap dropped by 98% to $20 million. And the control of the company was at the time acquired by a Brazilian investor. A Brazilian investor, a very traditional investor in mining. They were one of the founders, for example, of Yamana Golds in the early 2000s. Was a big success story. And they saw in Aura an opportunity to first build a turnaround case, and then second, a growth story. With then 16, 17, a new controlling group, a new management stepped in, and we started several transformations, which internally we summarize in three pillars. One is to have high quality assets and projects. And the high quality assets and projects, for many, it seems, when you read it, seems obvious, but for us, it doesn't mean large projects, but means projects that are highly profitable with short paybacks, even if they are smaller. Throughout the last 5-6 years, we divested, for example, from some projects that were very large, interesting, but very large, and acquired these small projects with very high interest rates of return or short payback periods, and maximizing the net present value. So we focus a lot on the financial side of the projects instead of the size of the projects. The second is having a strong balance sheet. Although we're growing and paying dividends, we have a healthy balance sheet. We have over $120 million in cash and equivalents. Our net debt over EBITDA is 0.5 times only. And we have the financial targets to never to exceed 1 time net debt over EBITDA in order not to put our growth story at risk. And the third pillar, and the one that we consider the most important one, is building a strong team and a stronger culture to support all this transformation. We have been implementing many, for example, HR tools that are very common in other sectors, like in banking, in tech, but not very common apparently in mining, such as a more aggressive compensation, not only for top management, but for middle management as well. 360-degree feedback, 9-box matrix, and others. And with this, we have been able to attract very good talent from companies like Vale, Yamana, Kinross, AngloGold. In the end, it's all about people. One thing that I'd like to highlight in terms of the cultural transformation is what we summarize here on this page, what we call Aura 360. We call this our mandala, which summarizes the values of the companies and what we see as our commitments for our main stakeholders. This was put together first in 2017 when a new management team stepped in. Then as a whole group, over 300 people, employees, we reviewed last year and improved. And basically, literally, this is a slide we have in all our internal and external presentations, because it invites us to ask ourselves before any important decision is made, what's going to be the impact of that decision on our employees, for example, and not only talk about safety, that's non-negotiable, but also in terms of motivation, attraction, retention. The same with community and environment. We don't want to just preserve the environment we're part of, but we want to see the communities grow as well. And finally, of course, to the commitment with the company, our shareholders. Of course, we need to deliver shareholder value as well. This framework is pretty much part of our culture. Even here in my shirt, you see 360 Mining, and has been a big source of competitive advantage, we see, to attract people, retain people, and achieve our financial targets responsibly. In terms then the results after all these transformations, we saw that our production, as I mentioned before, increased by over 90% since 2018. On the bottom left side of the page, I like to highlight our cash costs. You see our cash costs remain between 830, below 900 for most of the periods. This has been a very big achievement of our team, especially in this environmental, inflationary environment that we're seeing the last few years. According to several different research that we acquire, we see that Aura was able to move it from a third quartile in the cash cost curve to a solid second quartile in 2022 by fighting inflation. And then in terms of adjusted EBITDA, on the bottom, the right side, we see we're coming from roughly $20 million in EBITDA in 2018 and the years before, to over 120 in the last 3 years. And with the increasing EBITDA, the company was able to generate cash and then able to reinvest in the growth of the company. So going forward, after the summary of what we did in the past, and now looking a little bit to the future, where we see that we can unlock value to our shareholders. First one is definitely through the growth by building efficiently, putting in production the projects, the greenfield projects we have in our pipeline. Especially in these last 2 years, there has been many concerns from some investors on greenfield projects because of high inflation and many capex overruns that have been happening elsewhere. So we understand that building on time, on budget, these projects and putting them in production as expected is going to add value, not only because the company is going to be growing, but also we're going to build the confidence from the investment community that we know what we're doing. The second one is the growth in our mineral reserves and mineral resources, because the company had a legacy of not generating cash and therefore not having the financial resources to invest in exploration. We saw in the past over the years the life of the mines, of some of the mines, they decreased. What we started doing in the last few years was increase investments to increase the reserves and resources. We're seeing a significant increase, but the markets and many investors probably they would be even more confident when they see more reserves and resources coming, and it's coming. And the third one is increasing repricing our multiples. We are still undervalued. I'm going to show that our PNAV is very low compared to our peers. Although we have been number one in stock performance in Canada in 21-22, that was mainly the result of the turnaround. And many people still don't know Aura a lot. As we tell our story and keep showing results, we also see an opportunity for our multiples to go to according to our peers. Very quickly, our 3 projects that are going to take us to 450,000 ounces by 2025. Almas is the one that was mentioned at the beginning, that was delivered, and we announced the start of production yesterday. Almas, we delivered only 16 months. We delivered on budget and on time. The capex for this project was only $78 million, so it's a small capex for this type of projects. And that probably Almas is the best example of what I was mentioning in our 3 pillars, the type of projects we like. Almas is expected to produce 50,000 ounces of gold per year only. It seems for many, it seems small, but it has an internal rate of return considering 50% leverage of over 100%. The payback after goes into operation is about 2 years, so very short payback. So the economics is, I haven't seen recently one project with such interesting returns such as Almas. Next, Borborema. Borborema, we acquired 80% of Borborema last year. It's from an Australian company. There is a technical report which was released at the time in Australia. We are reviewing and building and doing a 43-101, which the summary of results we expect to announce to the market by June. In the second quarter, I would say it's going to be very busy in terms of news flows coming from Borborema. We expect not only to announce the new feasibility study, but also, if all goes well, announce to the market that we intend to start building the project, a detailed timeline, how we're going to fund it, and next steps. And finally, we have Matupá. Matupá, it's also in Brazil. It's in terms of size, similar to Almas. Matupá, we put a feasibility study in November last year, which indicated a mine that it could produce 55,000 ounces per year for 7 years. It seems small, the reserves, but again, it's very, very profitable, very low strip ratio, payback below 2 years, considering feasibility study prices, which were around 1,600. And in Matupá, because it's the last in our portfolio, is the project we invested the least to know the geology. Now we're investing more and more in Matupá, and we're seeing there is a potential to maybe become a larger mine in the future, because we're not going to announce that we're going to start construction in Matupá in less than 1 year from now. Our strategy is, okay, let's continue in 23 and 24 understanding the geology of Matupá, and maybe 1 year from now we're going to be able to announce something even better than we have here. Almas, already mentioned, almost 17 years life of mine, over 100% internal rate of return. NPV over capex is one metric we like because it shows also the return for every capex that we invested. It's 3.6 times. You don't see many projects with these interesting returns. This month we started production, and we expect by July to reach commercial production already in Almas. In terms of exploration, I was mentioning that we see that we can create value by increasing the reserves and resources. We come from investing around $8 million in exploration in 2018 to over $20 million in 21, 22, and we expect to invest another $25 million in 23 across all our properties. We have around 650,000 hectares of permits to exploring our properties, which we know geologically speaking roughly 10%. So as we are catching up and investing, we're already seeing the results. You see that on the right side of the page, our reserves increased 6%. Here comparing apples to apples, the same, not including Borborema, the same assets increased 6% despite the growth of our production. Our measure indicator resources almost tripled in the same periods, and our inferred resources remained almost stable, some small reduction. That's mainly a combination of two good news. One, we are finding inferred resources, but we're converting inferred resources to measuring indicated. Last year, for example, we converted over 100% of our inferred resources into measuring indicated. So it just shows that we are not yet where we like to be in terms of reserves and resource, but it's working. Our strategy of focusing in using part of the cash flows to reinvest in geology to increase the mineral resources, it's working, and we expect this to continue, this trend to continue. And finally, the third leverage to create value, the valuation. This was an analysis which was released recently by Raymond James. We are in this, or is in this category, is considered intermediate producer. So this analysis brings two takeaways. First, there is a possibility, there is an opportunity to close this gap. We are discounted more than 20% compared to our peers, and we believe as we keep delivering projects, we increase awareness of our company, we expect to close this gap. And the second, as the company grow, we expect to move to the left side here of the page and see increasing our multiples as well. So just as a summary, in the past, high quality assets, three good assets which are producing cash flows, good projects with short paybacks. We have a stronger balance sheet, building our foundation in our team, our culture. Our performance, I like to highlight, is although we have an interesting growth ahead of us, we're delivering results. So we're, let's say, in the middle of the cycle, have been paying dividends, over $115 million returning in dividends and paybacks to our shareholders. And ahead, we have a huge unmatched exploration pipeline. We can grow even beyond 2025 because we have other assets that are still not in our business plan. We have showing execution and the opportunity to re-rate, considering our gap compared to our peers. And finally, it's our share ownership, over 50% Northwestern, our controlling shareholder. In analyst coverage, we are covered by several analysts in Brazil and in Canada, most of them with by recommendation.
You're done. Okay, fantastic.
Yeah, in terms of presentation, yes.
That was wonderful. Thank you so much. Crikey, what an interesting company Aura Minerals are.
Yeah, no, a lot going on.
There's a lot going on.
Yeah.
That's a very understated way of putting it. Let me start by asking you about your latest open pit gold mine at Almas in Brazil. You nodded to it in your presentation, and talk us through how this reflects your Aura 360 strategy going forwards, which you, as you say, I mean, we're probably quite cynical about this, but you say it's a fundamental part of your business strategy.
Yeah. So, for example, in terms translating that in terms of results, I think I can bring it to practical results into the 360. We work in a very decentralized way. That's part of our 360 culture. We're people positive. To give you an idea, we have now 4 mines producing many assets. We have in our corporate office only 30 people. We decentralize a lot to the business units and keep it here at corporate. Basically, strategy, capital allocation, controls, knowing. internal external auditors, compliance, etc. The business units and the projects, they have autonomy to take decisions, business decisions. They are measured by the financial results, not how many tons they have crushed at the plant, but how much cash flow they generated, for example. That's even one of the targets for the managers. And if you take what happened in the last few years, for example, our Almas, the construction team, they had these targets. Okay, we need to build the project on time, on budget, and with the 360 values. But other than that, they could come to us and propose change if they saw fit.
And you think that 16 months to construct with a capex of $78 million was a good result?
Yes, because it was because much of the decision of how can we save in order to keep our capex under control is made by someone that is on the site, that knows and is day-to-day talking to suppliers and knows the trade-offs. Okay, maybe I'm not gonna engage this contractor, multinational company, but there is this Brazilian company that is very reputable. That I'm, as project manager in Brazil, I trust that company, and then that can bring a significant financial savings. That has helped to definitely, that has contributed to keep the project on budgets, because there was over 20% inflation for our segment in the last 2 years.
And did you say it was 2 years to break even on Almas?
After starting construction, the expectation was the feasibility study indicated 2 years to pay back. The feasibility study used as reference gold prices of 1550. So with gold prices now close to 2,000, we expect to be even less than 2 years.
And the life of mine in Almas at the moment is 17 years. What's the possibilities of growing that resource going forward?
Yeah, so Almas is in a green belt area in Brazil. It's still under invested in terms of geology. Because we have 17 years life of mine, and we have other projects and assets to invest in geology. So far, we haven't invested more, but our idea is, in our mindset with Almas and other project, is let's put Almas in production, let's get the payback of 2 years, and then after we get the payback, let's reinvest. And reinvest can be increased production. We don't need to keep producing 50,000 ounces for 17 years. We can at some time increase production. And let's reinvest in exploration so that we can increase both the life of the mine and the production capacity. But what we try to do is to have those investments with the cash that's going to generate by the project, instead of upfront putting a lot of cash.
Okay, no, that makes sense. So locally, the decentralized approach of your Aura 360 is to generate cash at Almas and then put that cash at some point back into developing the resource to build the life of mine and also make it more profitable.
Exactly, to grow.
Okay, no, it sounds like an excellent strategy. Now, you're very focused on increasing your total mineral resources. So tell us what this next year looks like. Last year was 124,000 meters drilled, which is a substantial amount. Mm-hmm. What does this year's work program look like, and what are the successes so far, and what are you looking forward to?
Yeah, it's similar. So last year we invested over $22 million in our properties. We added over 100,000 ounces in measured and indicator resource, which is a lot considering a production of 240,000. So it's not including FIRDs. If you including FIRD, another 500,000. So it just shows our properties there is so much potential. What we expected this year is to keep investing to convert new reserves, especially in MPP, that is operating mine in Brazil, and to increase the total resources both in Matupá, which is the project I was mentioning that we are going to start building next year, and in some more early stage projects, just as one project that we acquired last year, it's called Serra da Estrela. It's a copper project in the Carajás region in Brazil. That is not yet in our business plan because it's early stage, but Carajás region in Brazil is a very prolific mining district. So we are investing in Carajás this year, and hopefully having bringing further resources and then continuing the same path with these other assets for next year, so that we can go above 2025. Now, 25 we want to achieve that for 150,000 ounces, and then we want to build now a story for 26, 27, and so on and so forth.
Okay, so 240,000 ounces of production divided between gold and copper. You're a very good man to ask about the demand outlook for both gold and copper. How do you see it?
Yeah, that's a difficult question. No, people ask a lot where our gold and copper prices are heading.
Why is that difficult, though? Why is it difficult, given that that's your day job and that's what you do?
Yeah, no, because we don't know. No, we don't know.
You don't have a crystal ball.
Yeah, but what we know are the fundamentals. So, and the fundamentals are very different. So, in terms of gold, it's it has the impact of especially interest rates, U.S. interest rates. So we saw last year that the Federal Reserve was increasing interest rates, and gold was suffering for part of the year. Now what we're seeing is the opposite. People expect interest rates to remain at the current levels or not to increase significantly while the inflation is still around. So there is a migration to invest in gold as a way to a store of value. No, so it's a lot of expectation about what's going to happen with inflation when the U.S. interest rates. In terms of copper, is totally demand and supply. So at some point last year, there were some expectations also from the market that because of increasing interest rates, we would see the GDP, world GDP growing less, and then the demand from copper decreasing. It hasn't happened, and now with all the investments in the green economy and the demand that we're going to see for copper from EVs, we're seeing copper already picking up. More in the medium and long term, we're very bullish for copper. We see that there will be not enough supply to meet the demand. So we're very positive going forward for copper.
Okay, that was lovely. There you go. It wasn't such a hard answer after all. I thought that was really illuminating.
Yeah, no, I can't explain the fundamentals, no. But where the price is
let me ask a really hard question. Let me ask you a really difficult one. In terms of consolidation, well-run gold and copper miners such as yourselves are highly sought after, and super miners are forever consolidating. You know what the super miners are like. They're always finding someone new to buy. Would Aura be happy to exit for the right price, do you think?
Well, I don't know, because I'm part of management, no, and we have a controlling shareholder. I think with the right price, everything can be sold, but there is a lot of potential we're in the middle of the growth story, no. So I think that would have to be taken in consideration, that all the upside potential that Aura has.
So everything has the right price, but nevertheless, as part of the management team, you'd really rather get on with the day job and grow everything.
Yeah. Our job is to create shareholder value and stakeholder value in general.
And that's what you're doing. Fantastic answer. Very good. You've been to the right school. What can we expect by way of news flow from Aura Minerals in the next few months? This is your last question, Kleber. Final answer.
Yeah. So from now to June, we expect some news from Borborema. Both the results of the new feasibility study and also if all goes well, we're going to announce a timeline and the intention to build the project. I think that's going to be a big milestone in the next 2-3 months. And also Alma's reaching commercial production by July. I think those are the next big announcements.
It's Borborema is the next Almas.
Correct. Yes.
Brilliant.
And the good thing is in Borborema, it's similar in terms, it's in the same jurisdiction, open pit, CIL, similar technology that Almas use. So we're bringing the team that was able to build so well Almas to. So there is a lot of learning from our team. So it's going to be the same team that is going to build a similar project.
Terrific answer. Okay, that's a really good, strong finish. Kleber, thank you so much for joining us. That's Kleber Cardozo. He's the CFO at Aura Minerals. That was really interesting. Fantastic. And that's it from us after another great investor evening. Thank you very much to all our speakers for joining us live from across the world. And to the support teams, the great unsung support teams for doing such a great job in getting us here. Not forgetting, talking about unsung heroes, not forgetting the entire London South East team and the London broadcast studios who do such a terrific job of getting us on air and keeping us on air. Thank you one and all. And don't forget that if you'd like to buy Canadian stocks, you can do so on the Interactive Investor Trading Platform. Talking of which, I'd like to give a special thank you to Jeff Burdett and the fantastic team at Red Cloud Financial Services. They are the Canadian broker who connect us to such high-quality mining companies in North America. Finally, a huge thanks to you all once again for being such a great audience and for sticking with us long into the evening. And we look forward to seeing you again on May the 23rd when we have a cracking natural resources evening for you. We have pretty much 4 companies lined up already. Good night and take care, everyone.